Hello everyone, it's Janne Muta from TIOmarkets here. It is a great pleasure to have you in this live workshop where your questions are most welcome. I'm here to help you guys. If you are new in trading, it really doesn't matter. We all have started somewhere and we all have lots of questions in the beginning. So I'm very happy that you have chosen to come to this webinar. I'm very happy if you're watching this later on. And if you put through your questions through the chat box, I make sure I get, I do my best to answer those. And if you're watching this later on video, you can always email us at support@tiomarkets.com. And you can tell that this is a question for Jan. He promised to answer this question. So either I'll get back to you over email or answer in the future in the future webinars. Cool. Okay, let's dive into today's material. I'm going to talk to you about how to find great trading opportunities in 2022. And I'm going to talk in a little bit more detail about the Confluence analysis that I do. And I'm going to share you why this analysis is so powerful. Why does it help you to find these great trading opportunities? And obviously, if you have any questions related to this, always let me know. So in this workshop, we'll cover technical tools for Confluence analysis. And I'm going to use some recent real-life examples that I have published. So I'm not going to go to charts and see, okay, this looks like this supports my ideas, because that is obviously a flawed approach to trading. You're always faced with the markets that are there, moving real time. You don't have the luxury to go back and look at the charts and say, okay, this is what I would have done. Now, that can be a learning tool, but I think there's more credibility to what I'm saying and doing if I'm using examples from my real life analysis, something that I have shared with you at tiomarkets.com/analysis. And if you haven't done so yet, go there now, tiomarkets.com/analysis, and register for, it's a great analysis that works. If you follow my analysis for a little while, you can see that it works. There's no bluffing. There is no cherry picking. I'm just, creating a public track record of high quality analysis, and the analysis is tradable. It is actionable. So go there and register. It's free. So make the use of it. Then I'm going to talk to you a little bit about intraday and intermarket confluences as well. But most of all, if you have these questions that are bothering you, if I'm not explaining something clearly enough, let me know, and I'm more than happy to help you out. But first of all, why should you listen to me? You can go and see my track record at tiomarkets.com/analysis and see that yes, the stuff is really high quality and good. But the reason I'm able to do this is I have about 20 plus years, I think 23 years now of experience in financial markets, analyzing and trading the markets, both at institutional and retail settings. So make the most of the stuff that I provide to you, because I have spent so much screen time learning all these things, and I have learned from others. Obviously you learn the most from others, but I have also found out some things on my own. I believe that they are probably not unique in the sense that I would only be the only person in the world to know about these things, but I have made discoveries over the years, and I'm going to share some of these with you in today's webinar. So before we go forward, remember that anything that we talk about here is just for educational and marketing purposes only. This is not investment advice. You are responsible for your own trades, and that's the way it has to be. And obviously you need an account to trade with. And I would love to recommend a TIOmarkets VIP Black account to you. There's 0 commissions per lot, no monthly subscription fees. You get the tight spreads and access to lots of markets. And you know, I've traded with this account, and it is a great trading environment. So I can recommend it. The way to get the account is to go to TIOmarkets.com. There you fill in your name, email, the country you're from, choose the regulator, and then you will get an email. You get a wallet ID and obviously the password you have chosen yourself when at the excuse me, at the registration stage. Then you need to log into your trading portal. There is a link that you can click, and that takes you there. And then you go and download MT4 or MT5 and start learning how to use the platform if you are a new trader. Once you are inside, or once you have logged in to our client area, there's a couple of things I want to show you. So first of all, go to Download Center, get the MT4 or MT5 platform, whichever you prefer, and then open a live account for trading. You need both a live account and a demo account. Live account for trading and demo account for practicing. And then you go to the deposit section to actually deposit funds on your account. Here you can see the options for money transfer, and once the money is over there, you can start trading. And should it happen that you need to reset the account password, if you don't remember it, you can go here, you go to, you choose the account that you are interested in, then, or the account you want to edit, then you go to account settings here and click reset the password, and a new password will be emailed to you. So the whole idea with Confluence Analysis is that the market is huge, and you are not in a position to change the market's direction. It's just impossible. There is no way your money can turn the market around. If the market is moving to a direction, there is no point trying to fight against the market, because the big money is moving the money into certain directions. Say the market is moving lower, why should you step in and start buying if there is no evidence that the big money is flowing into the market and taking the prices higher? I mean, I'm saying this and pausing a little bit because so many traders spent their life fighting against the market. They get disappointed, they blow their accounts, and they stop trading because of this one single reason. They never learn to trade with the market, but they always fight the market. And Confluence Analysis is about finding areas or levels where we have a, where we can say that there is a probability, there's a good probability that the market is going to move higher. There's a good chance that the market's going to move higher. That's when we want to be a buyer. If the market is coming to a level or an area where several technical factors come together, and we believe that the market might actually move lower from there, then that's a resistance, and that's an area where we have the sort of probabilities on our side that we can actually trade short and sell the market and go with the flow. It's all about finding confluence levels and areas, levels where the market might actually move into certain direction because of the big money trading in a certain way. If you try to fight the market, your life is going to be pretty miserable. Okay, the key principles. Basically, this might be your experience too, but I have done this mistake so many times, and This is why I do this Confluence analysis nowadays. Every morning I spend a couple of hours looking at the markets, seeing what's happening in different correlating markets, what's happening in different time frames, and trying to get an idea where the markets are going. So that approach eliminates the big mistake that many traders do. Their big mistake is that they focus on one factor or two factors and then they forget the big picture. Does it sound any familiar? Have you guys done this? Am I the only one that has done this before? Let me know in the chat box. Yes or no. Is this something that you have struggled with? Just quickly. It doesn't take too long. Yes or no. So the thing is that if we focus on one or two factors, we don't focus on the big picture. Then number two, Confluence analysis together with price action inside the confluence zones shows you what the majority are likely to be thinking. We never know exactly what the market is going to do. Trading isn't about knowing, but trading is about figuring out what the market is likely to do. And the market is likely to do what the majority is probably doing. That's the thinking that we have to have as traders. We have to put several factors together to help us to understand what is actually going on. Yeah, Luke, definitely. Yeah, I know. We all have done this. We have focused on one or two things and think that, okay, this is going to explain the markets. But if you think about the markets as a big sort of multi-factor game, it's a game that is impacted by, or an equation is probably a good sort of picture here. If you have a mathematical equation with lots of different factors, all those factors are going to have an impact on the outcome. And here the outcome we are talking about is the price direction. If the price is going to go up or down, it's impacted by multiple factors. And if we focus on only one or two, we are likely to get it wrong. Anyway, hopefully this webinar will help you to understand why this is important and how to move forward with, towards more successful trading in the future. So, Confluence analysis tries to find price areas where we have several technical factors coming together. And why is this important? Because if you think in terms of one or two factors, it's probably going to mean that you have a very small number of traders focusing on this one or two factors with you. But if you put several factors together, the probabilities are that there's loads and loads of people focusing on that same area, because somebody's looking at the trend lines, somebody's looking at the moving averages, somebody's looking at the Fibonacci levels, somebody's looking something else. And if we can put those things together, and if we can identify an area where those things come together, then there's a bigger likelihood that we find an area that's significant for a lot of people. And then price action inside that area is going to be much more meaningful than outside of that area. So the idea is to increase the odds as much as you can. One or two factors doesn't do that, but if you add more factors together, you are increasing your odds and you are moving in the right direction. Then number 4, confluence between technical factors points to key price levels. This is actually something I said already. If we have several technical factors pointing to one price level or area, then we are better off than just using one line that we draw on the chart. Then as in all the technical analysis, higher time frames always are more important than the smaller time frames. So what's happening in the daily chart is much more important than what's happening in 5-minute chart. For the simple reason that it takes a lot more traders to form that one candle of daily candle, for instance, or a daily support or resistance level. That's decided by a huge number of traders compared to a support and resistance levels in 5-minute charts, right? That should make a lot of sense. A very simple thing, that it's a powerful principle, and if you applied it in your trading, you are going to be much better off than just using the 5-minute charts alone, or 10 or 15 smaller time frames anyway. So let's move forward. The technical tools you can use in Confluence Analysis. I'm using trend lines, trend channels, support and resistance levels, Fibonacci retracements, moving averages, not so much Bollinger Bands, but I've listed them here because you might want to use them. And then I'm using the context or the recent price action. And, you know, I'm not going to go deeply into all of these technical tools and how to use them, because most of you know already, or you can just Google and find explanations for these. But I'm going to show you how to use them. I want to show you how I use them so that you can benefit from the same ideas and grow as a trader, because that's at the end of the day, this is why TIOmarkets has hired me here. They want you to learn, they want you to get better in trading. So let's go to those real life examples that I have for you. And I have Euro Aussie, gold, New Zealand USD and cable. And these are the factors that I have identified in those markets. And basically, let me just go to the charts. So here we go. And I'm going to take you to Euro Aussie. So basically what I have here is I have used the replay tool to go back to the time of my analysis. So basically, let me go again. Let's see if I can get to this analysis report. It was here. Yeah. So basically, this is what the market was looking like at the time of my analysis. And like I said, there is a public track record of all the analyses at TIOmarkets.com/analysis, and you can go back there and see whether the stuff that I'm talking about is real or not, because there's so much there is so much material in the internet that isn't what they claim it to be. So you can actually go here. That's why we have all of them online. You can go and see that this is real stuff. It actually works. So what I did with the trading view charts, I used a replay tool to go back to the same situation, and now we can take a look at what was happening here, why this was successful analysis. So first of all, it's always I'm sort of trying to drive it into our traders' heads that you have to understand where the market is going. What's the momentum? What's the prevailing momentum in the market? And this is what we had here. We had a momentum changed. We had a market trending lower, then it started moving, it kind of started wedging here, and it broke out of this wedge, came back like often happens. The market very often moves back to the wedge and then rallies higher. So this is the context, this is the recent price action in this chart, and this is 8-hour chart, by the way. And now you can go and see the analysis yourself on our blog, but basically here the factors that I was focusing on were the momentum change, and also the fact that the price was trading above this recent high. We had a resistance there, and because this is an 8-hour chart, and my experience is that Confluence Analysis works the best if you have a higher time frame charts. So market moved to this level, bounced back, but then penetrated it. So that was fairly sizable move. Let me see how much this was. This move here, oops, let me see. I need to learn how to use this. There we go. This move was about 1%, so 160 pips. So that basically suggests that the level is important, and once it was penetrated, the market kind of retraced close to it, but then moved higher. So at the time of this analysis, I was saying that because we have these factors here, and we have the 50% Fibonacci retracement level at the same, coinciding with this same level, that's why this is a key level, and if the price retraces back to this level, it actually makes sense to look for longs. Why is that? Because when the price is at support, you want to be a buyer. A very simple rule. If the market is at resistance, you want to be a seller. But if you have market coming to a support, when you have momentum to the upside, there's a high likelihood that the market's going to go higher from the level. And actually, I said earlier that I'm not going to explain too much about the technical tools, but I want to say a couple of things about the Fibonacci retracements, because I have had a problem with this in the past, and I know that many new traders have also. And the question we always have to ask is, what is the high? What is the low that we're going to use? What are the highs and lows that we're going to use in Fibonacci retracement analysis? Because we could use so many different turning points. And the way I have solved this, and it makes the most sense to me, the way is that I'm going to use different highs and test where the majority of levels make the most sense. Okay, somebody would say that this is the most orthodox way of drawing the lines from that high to this low, and then we get, then we can measure how much the market moves back to the upside, how much of this downside move the market has retraced. Okay, that's okay, because 23.6% is somewhat coinciding with this high here, and okay, there's that low there, but I don't see this being so useful as this method. I take a level or a high where most of the levels, most of the Fibonacci levels coincide with something significant on the chart. Here we have, for instance, let me see. Here we have this 38.2 Fibonacci retracement coinciding with this level. Then we have the 50% Fibonacci retracement coinciding with this level. And basically, those two things tell me that for the recent price action, these levels or this way of drawing these levels is valid. And now talking about Confluence, we had price coming here to this level, and then we had the 50% Fibonacci retracement here. So this area was likely to be important. And at this stage, obviously, we don't know when the market comes back, whether it's going to go through or turn higher. But what we know is that we have all those people who focus on this level and focus on 50% Fibonacci retracements. They are actually focusing this as well. So let's move forward and see what happens. The price moves back and then moves higher. It doesn't make a new high, but from that low here, that's about 80 pips. So that was a significant move. It's about $800 per contract. So that's a pretty nice move. And all you had to do was to do the Confluence analysis. Does this make sense to you? Let me know what you think in the chat box, please. Is this difficult? Is it easy? Does it make sense to you? Do you have questions you'd like to ask about this? And while you write your answers, I'm going to go to the next market I have here. So the next market, let me see. The next market was gold. At the time, gold was trading here and it had moved down. It was kind of looking like it might be moving higher. And I want to show you what actually was in my thinking, what went in my head when I was looking at this market. Oh, thank you, John. John is saying that it makes sense. Is it John and me only here, by the way? Hello guys, where are you? I need your participation in this. This is supposed to be an interactive strategy webinar. Hey, you guys need to help me. Otherwise it's just me and John here. So, does it make sense? Do you have questions? Do you have criticisms? Obviously, if you disagree with me, I'd love to hear from you as well. That's always challenging. It's nice to hear that people do their own thinking. Oh, Luke is saying never thought about using the 8-hour time frame before. Looks great. Yeah, I would say use all the different time frames. Use the daily, use the weekly, use the 8-hour, 4-hour, 1 hour to get a full picture of what the market is doing. But 8 hours gives you pretty good understanding what the market is likely to do. Okay, then let's go and see gold. And here we have the same situation. Basically, we went back using the replay tool to the very same time. And the factors that we have here, again, the Fibonacci. So here, obviously, because the market had already moved up there, it basically didn't make any sense to draw the lines from here. The only option to really draw the lines from were basically this high or this high. So I chose the highest high here. But the idea is that now we have there a level that coincides with 50%. We have here these levels coinciding with 23.6%, and then the market retraced back to 38.2 and started to react higher. So the fact that the market was trading at 38.2 Fibonacci retracement and at the 50 period moving average, the averages I have here are 20 period and 50 period, and the market wasn't trading too far from this low either, this rising channel support here. So that was fairly close. And then one more factor, the stochastics 5, 3 and 3 were actually oversold. So that gave all this together with the fact that the market was looking to move higher. It basically, this market comes to this level and starts to react up. That tells you that, okay, there's some early signs of buying coming in, and then if you look at what happened, the market actually moved all the way up to the channel high before starting to react lower again. Cool. All right, let me move on. We've already spent 38 minutes. Oh my, how the time flies. So we need to move faster. Then, excuse me, New Zealand USD. Market is trading close to the channel low here. We have resistance up there. Let's go and take a look at the chart. So I've reconstructed the same kind of setting here using the replay tool, and the market came down to this channel low, started to react from there, but kind of couldn't get through this resistance straight away. Anyway, we had the stochastics oversold. The market was trading close to the recent to this channel low, and it was, now we don't have Fibonacci support because the 61.8 Fibonacci retracement is above there, but we have something else here. We have this recent low and the Fibonacci level coinciding. Excuse me. Sorry. Yeah, we have those two factors here that obviously are significant. The market has to overcome this resistance in order to move higher. So that's your trigger. You need to see this invalidated. It needs to be violated in order for a market to move higher. But this is what happened. The market never violated this channel low. It kept on fluctuating and eventually moved higher. So yet another good reason to follow TIOmarkets.com/analysis, right? So basically, I don't know if this if this doesn't entice you to go and read our analysis on daily basis and trade with us. You know, we provide this for free to you. So it would be nice if you just opened the trading account with us and started to work together with us so that you can grow as a trader, and you have, you know, maybe you can even go and tell your friends about TIOmarkets. That would be awesome, guys. So thank you if you would consider doing that. We would be so happy. Thank you in advance. So the factors coming together here, we had stochastics oversold, the market trading at rising support, and then we saw the price breaking above this resistance, which was the first sign that the resistance is weakened, and then the buying. Obviously, at this point here, let me just underline this fact that we don't know. Actually, there's a better way of doing this. There is a better way of doing this. Let's do this. So when the market breaks above that resistance, you never know if it's going to shoot higher or go back. And that's the challenge with trading. You never know that. You just have to accept it that the market might rally from here. You have to try and see if the market rallies and trade with it. If it then retraces back, depending on your strategy, you might have your stop down here, which obviously keeps you in the trade. But if you had a tight stop, you just take a quick small loss and you wait for the next opportunity. Maybe you want to be a buyer at the trend line. That would have been a nice strategy. But when the market is here, there is no way of knowing if it's going to go to trend line first. So you just have to keep on trying this. You can't wait that the market's going to come down to the trend line and trade. This is something that new traders often do when they look at the charts and think, okay, I would have done this and I would have done that. But actually, in real life, you're going to do a lot of, you're going to take a lot of trades where the market doesn't go immediately in your favor. There'll be times when the market stops you out first and then you try again and then you get it right. As long as the big technical factors are still intact, like the fact that the market was trading above this moving average and it was actually making higher lows as well. So that's good. Excellent. Okay. Any questions at this point, guys? I have Luke and John here with me. Anybody else here? What happened to Muhammad and Rasul? Are you still here? What about Julianto? I'd love to hear your questions and comments. So it's kind of boring to talk alone. So if you let me know what you think, if you have any thoughts or ideas, or if you want to contribute to what we do here, let me know. Lovely. Okay, let's move forward. Then there was this very successful cable analysis. This was on 22nd of December, and actually market rallied over 400 pips from these levels, and we followed our cable higher and traded the market higher. So that was really nice. It was a great setup. So let's go and take a look at what was going on here. So here's cable, and let me go to the templates, and I'm gonna add the stochastics and SMAs here. So the big thing here was that the market was trending higher, and I think we had some support from let me see if it was, yeah, there was 50% Fibonacci retracement, and I want to make sure that we 50%, yeah, that was correct. So I drew the Fibonacci lines from that low to this low here, and that roughly coincided this high here with 38.2, and this high coincided with 50%. And now we had the market trading, it was approaching the channel low. I think in the analysis actually the market was already bouncing higher from this low, but it's not possible to exactly replicate here using the replay. But at the time I was looking at this, the market was already bouncing higher from that low. So that was an indication that the market is going to go higher. It was sort of indicating that it is sort of honoring this rising support, and we had 20 period moving average there. And let's see how it played out. So the market really rallied nicely. That was so strong, that rally. It never looked back. Then there was some fluctuation, and eventually the price just kept on going higher and higher and higher. So that was on after the news that we had BOE hiking the rates, being the first G7 central bank that hiked the rates after the pandemic. So since then, pound USD has been very strong. Luke was asking, do you think most of these trade examples coincide with dollar weakness? Yes, definitely. That's a very good point. Thank you, Luke. It's basically, and if you go and read my analysis, you can see that I'm very often doing the analysis against the dollar. Because when you have pound on one side of the equation and USD on the other side, then obviously strength in pound and weakness in USD means that cable will go higher, pound USD will go up. And I think it was just yesterday that I was doing analysis on. Let me see if I can go there. That was okay. Yesterday's analysis is here. So no, that was, I was thinking about 17th. So yeah, when dollar index was trading at this support or approaching this support, I was saying that this is probably a time when we have New Zealand USD reacting lower. This was in that context. Let me see if it was in this same analysis. That's pound USD there. And no, New Zealand USD, that was earlier. Yeah, that was the day before this, so it was 16th. And basically, when you have a dollar pair like cyclical currency like New Zealand dollar, fairly close to resistances, and then you have the dollar index trading at support, that's when you have a higher likelihood for your short New Zealand USD working out. It's basically because you are effectively buying the dollar against the New Zealand dollar when you are shorting New Zealand USD, a currency pair. And that's what happened. When the dollar started rallying higher from that support there, the Kiwi dollar just came down like this. That's a very good question, Luke. Thank you. So always understand what's happening with the dollar, because you're always trading against the dollar. So you're basically either trading with the dollar or against it. You either buy it or you sell it. But then when you're selling it, you have to decide whether you are oh, sorry, let me put it this way. When you are buying a currency pair, you have to decide, is this currency pair strong or weak? If the New Zealand dollar looks weaker than cable, for instance, then obviously it makes sense to short the cable. There's good principle of relative strength. Always try to buy the strongest market and sell the weakest market. So if cable is strong, go and find long opportunities in cable. If New Zealand dollar is looking a little weaker, then go and look for short opportunities in New Zealand dollar. But because these markets are nowadays just tracking what the Fed is doing, and or quite often you see that they just move together up and down against the dollar. All right, let's see. Okay, I think we have covered most of the material that I had for you today. And if you have any questions, I'd love to hear from you now, or you can always email me on support@TIOmarkets.com. So let's just wrap up this. Here's the list of tools again. You can use trend lines and trend channels, support and resistance levels, Fibonacci retracements, moving averages, and when these come together, and when the context or the recent price action supports this idea that you have, then it's really good idea to go and look for trades when several of these factors come together inside a zone. Often it might be 20 pips, 10 pips, 30 pips zone where these come together. And if you can see that the price reacts to those levels or inside that range favorably, then you have even further indication that you are getting it right and you should take a trade. Okay, I don't see any questions coming through, so I guess it's time to wrap this up for today. So basically, thank you guys for your participation. It was absolutely great to have you here with me, and I so much look forward to seeing you in the next webinar.